take a look at admiralmarketsglobal.com. Then, of course, the risks disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Okay, so by continuing watching this webinar, you agree with the risks involved and that they are yours, and with the content of this disclaimer. Alrighty, thank you for your attention on that. We're going to take a look at this live trading here, at my live trading, taking a look at the trend. For instance, the opportunity filters triggered entry method is a quick to do kind of trading list that incorporates very important steps, and I think that every trading plan should have these steps. Any trading document should incorporate these things and analyze what kind of setup and strategy elements we are looking for. Now, each particular strategy will have different combinations, configurations, right? If you're a reversal trader, obviously, the step one, defining a trend, you want to see a trend, but you want to see the end of a trend, right? If you're a trend trader, you want to see a trend continuation. So you would have different configurations, but this is, at minimum, a trading plan should have these elements like fine-tuned and explained. All right. So today we're going to focus on trend lines, but we'll also use other things, of course, like our usual moving averages and fibs and oscillator. Make sure to take a look at the Admiral Markets and social media. And with that said, let's take a look at the calendar, okay? In the meantime, I'm going to open up your question box, see if there are any questions. No questions so far. Good morning, Ian. Ian. Alrighty, so what do we have today? We got Spanish services PMI. We had Aussie GDP, which was more than expected, which was positive. We have services PMI pound 1 hour 35 minutes from now, so it will be tricky to trade the pound prior to that. It will be good to wait for that news event and see what the direction is. Also ADP today and the CAD interest rate announcements, so I won't be too particular on trading the CAD. I'll probably avoid it. That's my rule of thumb. The USD ISM PMI is also released, so there's quite a lot of things going on. I'll avoid the CAD. I'll wait for the pound news probably, and the dollar, well, that could have its own effect, of course, but that's later. That's still far from now. Of course, tomorrow we have euro and pound interest rate, and then we have the NFP, which maybe the market is a bit choppy in anticipation of that event. Let's face it, that is a big news event. Market is the biggest, let's face it, in the whole month. So market could be quieter, especially for swing traders in the week prior to that news event. You'll see that more often. Keep that concept in mind. If you're a swing trader, it's always more tricky to trade in the week of NFP. The other 3 weeks are better. Usually, this is of course a rule of thumb. I'm not saying I have concrete exact statistics confirming that. Ian is saying that he cannot hear me. Is there anyone else that cannot hear me? All right, or let me ask you this: Can someone hear me first of all? Oh, okay. Ian is saying it's okay. Alexander is saying as well that it's okay. Good. Cool. So thanks for that confirmation. So yeah, I'm not saying that I have clear statistics, but it's more an observation. It's more something I've noticed, and it seems to hold true in most cases. This week seems to be slow too, and with that many news events, maybe that's logical because the market is anticipating, waiting for those events to play out, to materialize, and the market is therefore a bit quiet and anticipating that stuff. So let's take a look at our charts now. First of all, the euro dollar. Well, to be honest, we hardly had any movement yesterday. It was one of those typical days where the market just just froze in a way, just oscillated. A typical range day, a typical day where swing traders really have nothing to do, and it's at best good for intraday traders. And the only thing you could really get out of the market was a couple of pips via scalping in a way. That was all. The other option, of course, is taking some position trade at a key level and holding that for a couple of days. But not sure if that was there present yesterday. But just to give you an idea of the market structure. Let's take a look again. Let's see. We had a spike up yesterday, so we were looking for the break. We did get the break, but it just didn't go anywhere. And at the end of the trading day, it is definitely wise to exit. So keep that in mind. Towards the end of London, if you don't get the follow through, then try to get out as soon as you can, because you can see after London closes here at around 4 o'clock. But that's not actually, let me take a look at the time. No, that's actually an hour still prior to London close. But in any case, after this dip down, here is London close. Let me zoom in a bit so you can see it better. Here's London close. Well, after the failure to get some follow through, when London closes, you know, the time factor rule, if you don't know that I'm telling you now, there's a time factor rule that the most volatility happens within the London hours, right, between 8 a.m. and 4:30 p.m. London. After that, New York afternoon time, things tend to quiet down on average, and then even more so, of course, during the Asian session, depending, of course, on the currency as well. I'm not saying that the dollar yen wouldn't move decently in the Asian session, but on average. So anyhow, yesterday we did get a break and pull back and continue, but it didn't go anywhere. And right about here, as I said, the market ended. The active hours ended, let me say it this way, and the currency went into some kind of sleep, as we can see. So yesterday was a non-event, basically. How about today? What can you expect today? Things really haven't changed all too much, in my opinion, in the sense that price is at the same spot as yesterday. So everything I said yesterday would be valid today. The only thing we could add is basically the fact that we have a trend line here. Basically, if we break above that, there is a decent chance that we can pull away from the moving averages. Look at the moving averages basically as a gravity, if you want, if you like. And it requires a certain speed to move away from gravity for just a bit. Look at humans on Earth, right? We are bound to the planet due to the law of gravity. We can kind of jump away from the planet, right? When we jump, we can move away. Despite gravity, we're actually moving away from the planet, right, when we jump. It doesn't last long. We don't jump far. Some people can jump more than others. Michael Jordan could jump a lot further than I can due to his speed, right? Depending on the velocity and strength, certain people can jump more, but everyone, or not everyone, but most people can jump a certain amount, right? So my point is, and I don't want to go to too much details, my point is that price can do the same. Price can move away from the gravity if it has enough speed and power to do so. And if it has power and speed to do so, it can move for a certain while, relatively short while, it can move away from the moving averages. And at a certain point or another, divergence kicks in. And when divergence kicks in, the likelihood of price going back to the moving average, the likelihood of gravity kicking in is going to increase. Right? So that's what happened here. Price started to move away from the moving averages. We had divergence between these bottoms. Then price started to move back to the moving average. Right? In this case, actually, it broke to the other side because of probably other time frames that are having its effect. Don't forget that one time frame never explains the entire market structure. So in this case, on this time frame, on this particular time frame, on the 1 hour chart, price moved back to the moving average, but then proceeded to move away from the moving average. So it had enough speed to move away, but then it ran out of speed and then moved back to the moving averages. And price is still at the moving averages, which means the price and the moving averages are totally aligned with each other. They're totally in sync with each other. That means at the moment there's no speed, right? There's no power. When the price and moving averages are so aligned, when the moving averages are flat and overlapping each other, when price is in them, that means that there's no speed, there's no momentum, the gravity is basically fully in force, right? It's as if, for instance, us humans are flat with our feet on the ground. Now, if we break above this trend line, that means that price has already proven a certain speed, because if price goes up and hits this trend line, then pauses, and then breaks the next time around, that means we already had an upside momentum, we already had an upside impulse. Price has stopped there, respected the trend line, and then decided to break through it. And that means that the likelihood of price being able to sustainably break through that trend line and sustainably move away from the moving averages is increasing. And it has shown already some certain power and speed by moving up to the trend line, and it's showing its follow through by breaking through the trend line. And then the likelihood of these moving averages, I'll make them orange, starting to point up like this and starting to indicate a momentum is increasing. All right, so that's how you can use these moving averages and trend lines as well. We're using both, in fact. We're using trend lines to understand that the market is flat at the moment. We're using a trend line to understand when the market psychology, when the market momentum, when the market structure could change. Above that trend line, it could change. That's why I'm using trend lines. That's why I'm using moving averages to show you lines in the sand. At what point is price able to escape a range-bound environment? At what level could price go into a trending environment? When could it confirm that? So that's why I'm always talking about these lines in the sand. What will price, the path of least resistance, what will price most likely do, and when am I interested to trade it? Now personally, if I look at this setup, the moving averages have been used the support and resistance. So the fact that they're at these levels still indicates a potential to be a bouncing spot, in my opinion. But it's more of an anticipating. This would be more of an anticipation rather than a confirmation style. All right. If we look at the 15, we can see that there's a slight downside angle because price is below the moving average. Moving averages are below each other, and you can see that the 1 hour is slightly bullishly aligned. And if you have any doubts, take a look at the 4 hour, and you can see that the market is a bit bullishly aligned, right? Because look at the long-term moving average it's bullish, it's pointed up, it's blue, and price is in the shorter-term ones. Shorter-term ones is above the blue. So just indicating a bullish structure. Anyhow, back to the 15. If you want to take an early break, then a trend line like this could make sense. We have the magenta lines, and a break above magenta could be an early break up to orange, but that's a riskier one. And the orange trend line would be the target. That's riskier though. I've got a question from Alexander. How do I know how long to hold a trade after it breaks the trend line? Yeah, it depends on the structure of the market, but in general, indeed, you want to hold it. It depends on your strategy, but you always want to make sure that the reward to risk ratio is present. So that's one thing. Or use a trailing stop. If you're trading a range system, you want to hold it to the next support or resistance, indeed. If you're trading a trending system, you might want to use a trail stop and or hold it to a higher support or resistance if you anticipate a bigger move. That will depend on various elements such as is there a strong trend present, And if you're trading a reversal, you might want to trade it indeed to the next support resistance. So that depends on what structure, type of trading environment you're looking to trade. Yeah, a trading stop could do very well in a trending environment. It wouldn't do too well, I think, in a reversal, although sometimes it could do okay, depending on how big the reversal is, to be precise. And that's always difficult to estimate. So that's why it doesn't work too well. So I hope that answers your question there. So back to hourly, basically we do have a support level here. So if that support level breaks, there could be an early breakout to the downside as well. That could be a line in the sand. So we have a couple of lines in the sand. We have basically the magenta, we have the orange line, we have the blue support line, we have, we can make this a different color, we have the red trend line here, red horizontal line. All right, so those are key levels. Those are the key levels, I would say. Now, if we break, we're breaking actually magenta as we speak. So it doesn't look like we're going to break blue. If we break blue, though, let's take a look at the 4-hour chart. I would say I wouldn't expect much movement. We already have a support level here potentially. We can put a fib on this upside as well. So, well, basically, if you look at the fib, let me reformulate that. In fact, if you look at the fib, then I would say we need to break below 61.8, which is the 137.10, and we have maybe 30 pips space till the 786 fib at 136.80. There's not really a lot of space there. And then we could expect to bounce again. That's the break upon blue to the downside. Really, to get a bigger downside, we need to break the 136.40 bottom, which is basically also a trend line like this, right? All right. So that's the downside. How about the upside? As I said, I already talked about it. The break of magenta would be an early one. A break of these moving averages would be a bit more confirmation, and the most confirmation would be orange. The thing is, though, that orange might not break today. Orange, if you want a break of orange, then you're assuming a trending day. Not every day is trending. You look at yesterday, it was not a trending day at all. If you're a swing trader, that's okay because you can look and shop around at multiple currencies. If you're a scalper or an intraday trader and you're focused on one or two currencies, then you'll have to be a bit more flexible in trading pieces that are smaller, are more intraday, bouncy, rangy type of environments. So that depends on your own trading strategies and plan. Personally, I'm more of a swing trader looking for trending environments. So I try to focus on currencies that are trending, and if they're not, then I just skip to the next currency. Right? If the euro dollar is not trending like yesterday, I don't trade it, for instance. Other traders only trade the euro dollar and are trying to trade it every day no matter what the environment. So they're trading one currency in various environments, and they're adjusting their plans to that environment. I have basically a more set plans and strategy, and I wait for the environment to match my plan by shopping around with multiple currencies. Anyhow, basically, if we are trying to intraday trade it, in general, what I always do for the euro dollar is wait for some impulse to see what direction it can go. Let's take all the moving averages off for the moment, like this. And let's see. Let's try to see if we get a couple, 1 or 2 hours decent upside. Then the likelihood of a pullback and continue might be there. That's something that always can work in an intraday time frame, right? Always look for the momentum. What is the momentum of the day? Look for the pullback and try to take the pullback and bounce off the pullback for a decent amount. Now, don't expect the world when looking for the bounce, because especially in an intraday time frame, 30, 40 pips is already a decent amount for trading a bounce, right? Because sometimes a daily candle could be 60 candles, 60, 70, 80 pips. Let's take a look at what yesterday was. Yesterday was exactly 60 pips. So if you catch 30 of those, or 40 of those, you're doing already a substantial part of that. So that's more than enough to aim for. I mean, if you're looking for an intraday trade, right? So that would be my advice if you're looking for an intraday trade. Let's see. We don't have those guidance yet. We have one bullish candle the last hour, but that's not enough for me to qualify it as a movement. Let me see if we can find some other example. Well, for instance, this was a clear upside. That happened in New York afternoon. Asia was a retracement. And when we get, for instance, 1, 2 candles like this follow through, then that's a pretty decent likelihood of getting a follow through that day. Let's see. Claudio, I remember that you wrote something about looking at the Camarilla indicator a bit more. Let me see. Yes, Claudio is present. So let me take a look at that. Well, let me first look at the pound, and we'll look at both after that. I'm not a big user of pivot points, so my workable knowledge with it is limited to a certain degree, but we can definitely take a look. But I primarily look at it for the pound and euro. So let me look at the pound dollar first. Pound didn't get the follow through at all above our trend line. It just actually hit that trend line, and although we had that expected downside, that's something I expected. Although I would have thought it would have maybe done this. Actually, it made down, up, and then down instead of down, up, if you know what I mean. So we didn't get the follow through. That's basically what happened. And we stayed within the high and the low that was already set early in the day. The high and the low was established pretty soon in the day, and price just didn't break above or below it and just stayed within it. Now, although I hoped for a break to the upside, I don't know if you remember, but I did say this is already a decent amount of pip movement for one day. The thing is that although I hoped for the breakup, the pip movement was already a decent amount, was already such an amount that actually price just couldn't break through it, and we stayed within that range, and we had a ranging day instead of a trending day. And if you looked at the daily candle, that was something, let's take a look at the daily candle, that can happen. If you already have a decent size move, right, because this was already a bit of 80 pip day, then that particular high and low was already used as an indication of that range. So that's always the risk with that. We didn't get really a trending day. Here too, the same scenario though. Let's go back to the hourly. The same scenario basically as the euro dollar. Here too, the same situation where we're back at support potentially. All right. I still have the long, as you can see. I just tightened the stop loss by a bit. I moved it below this bottom now, really very close to this bottom instead of a 12 pip difference, because now we have these fractals in between the stop loss and price. So these particular fractals will help with protecting that trade. Plus we have a trend line, so I feel confident enough to tighten the stop loss by about 10 pips there. Not much, but at least a bit. I wouldn't do as yet these stop losses. I wouldn't move the stop loss to below these stop losses unless we get a clear move up. And we are getting a bit of a move up, so it could already be done. Maybe waiting for a bit more. Probably I'll be waiting for a break of this orange trend line to the upside. Then I'll move the stop loss to below these fractals and tighten it even more so to the point that the current risk is very little, right? That would be the next trail stop phase. We're, however, to come back to the original point, just like the euro dollar, we are basically in the same setup structure as yesterday. We're back to support. This is back to support, back to the trend line, back to this level, and we are getting a bit of a bounce as we speak. So what do we need? What kind of confirmations do we need to trade it? Well, as I said, it depends always on what type of trader you are, but if you want a confirmation of if price can escape the moving averages, then this trend line effect is not enough. If we break this trend line, we're actually just about to break the moving averages. So the likelihood, I guess, of a break occurring, but the price moving back as a pullback here is pretty decent. So break of that trend line is a bit risky. I'm not saying that the break couldn't fare well, but I would probably not be too fond of trading the break immediately, the immediate break, the trigger happy entry here. Because the break could turn out to be, let's say, move up a bit, but then return back to this level. I would be a bit worried about that particular scenario. So what I would rather wait for is a sustainable break, especially with the pound news coming up. And with a sustainable break, I mean, I want a couple of hourly candles above this trend line. When that has happened, I would look for a bull flag on the 50-minute world and then trade the break of that. Because at the moment, if we break these moving averages, what could happen, and this trend line, what could happen is we get an upside, but then the upside gets rejected, and we see a hourly wick on top of that breakout candle. That's something that could happen here. So I would rather wait either for a break, bull flag, and another go, or I would rather wait for a break, pull back, and see if we can get a bounce again, for instance. The difference is that one scenario is assuming a bull flag, which is a slow corrective move sideways. The other one is anticipating a bit faster move down and anticipating a bounce again off the same support levels, basically. How about downside? That would be the upside scenario. Downside, a break of this support line would indicate the potential for the price to move down. How far? Let's take a look at the 4-hourly. Not all too far because we have support kicking in pretty soon, but price could fall at least down to the 38.2 fib again, and if we break the 38.2, then down to the 50 fib. Those would be the support levels on the pound dollar still active and still present. So any downside break, any break of support to the downside would have to target the next support levels because although the downside break might work fine, we have to limit our expectations, I think, because this is still, however you look at it, a very big impulse, a very big momentum up. And therefore, I would still expect the 50 fib to be a bouncing spot. The structure of the market would change, I think, as I said yesterday. If the 50 fib gets broken, then things start to look more bearish. However, until the 50 fib gets broken, anything trading to the downside is reversal has reversal elements in it, or is a reversal setup, let me say it this way, and upside is with the trend. And basically trading it maybe above this level right in here would be with the trend breakout scenario. Let's put a line there. Anything above, let's say this 162.20, 167.20 would be the breakout scenario. Now, what if that happens? What if we break above 167.20? What kind of targets could we have? The next resistances, of course, which are basically this top, right here, 167.70, and the very top at 168.20. And then, of course, the bigger target at 169.77. All right, so those would be the key levels to target to the upside. Now, which one you target will depend on which time frame you traded and which stop loss you use. If you use a lower time frame and you use a tight stop loss, obviously you need to go for a target that matches that relationship, because if you use a tight stop loss but you're aiming for the moon and you're aiming for 180, 1,300 pips from now, then obviously the chances of that succeeding are too low. It doesn't make sense. That combination, that relationship, that balance is not there. If you're using a tight stop loss, then obviously aiming for something that is relatively close by, like the 167.65 here, 167.70, and maybe that could be a 1.5 to 1 R2R, makes the most sense. If you want to treat it as a swing trade, then maybe you can hold it up to the 169.70. Björn is asking if I ever count an ABC wave of a retracement, I think Björn is saying. Yes, I count waves myself. I don't share that during this webinar unless we have a specific wave webinar, and that's because I know a lot of people get annoyed with, or not a lot, but there's certainly a group of traders that get annoyed and they don't really have no interest with wave counts, and I don't want to over-combine maybe certain elements, so that's why I don't really focus on that. No, you don't have to be sorry. Please don't feel sorry for any questions anyone asks in here. I appreciate every question, in fact, and I like questions because I like the interaction, so it's always very much appreciated. It's just that I'm just explaining to you why I don't use it, that's all. If you look at the wave analysis, then I am not too certain about the wave analysis. I'm not very certain about the wave structure at the moment. And the reason is because it's taking so long to do anything. It's such a consolidation, it's such a sideways move. The most difficult thing in wave counts is always trying to figure out how the consolidation structure is composed. Impulses are a lot easier, and consolidations are more difficult. Now, usually the consolidation, I would have expected this consolidation to have ended earlier. The fact that it didn't is already explaining to me that I will have to probably change my wave analysis, because I had this as a bullish upside with this as a wave 4. This isn't really starting to make much sense. Now, I still have that count because we haven't broken this trend line. If it breaks that trend line, I'm immediately changing my analysis. If it does still break to the upside like this, then it was I guess just a very prolonged wave 4. It's possible, although the chances are starting to diminish. But my wave analysis would expect a break to the upside here. So let's see. The wave count would basically, at the moment I have, let me show you, in fact it's easier. Let's see, Hans is asking, what are the small arrows? Those are fractals indeed. Yes, They are always on top and bottom of the candle. I'll explain what those are in just a second. Basically, this is looking like a bullish structure to me, so I had it like impulsively set up, and this is a wave 4. Okay, expecting wave 5 of 3 here, higher. Let me zoom into that. You can see that zoomed in on the hourly. You can see wave 3 ending here, and this is the entire correction explained in a wave at the moment, wave analysis. But you know, we never know if it's correct. But it's just how I look at it is just as a guideline for me, right? As an idea what the market structure is doing. So what I have at the moment is a complicated W pattern, a double correction for W. Then I have an X here, and at the moment I have a Y here for wave 4. So let's see if that pans out. No idea. To get a confirmation, I have a break of this trend line as needed. But as I said, I also have another trend line here. Oh, I don't have that on the chart at the moment. Let me put that on. I have 2 trend lines. This magenta and purple one. We need a break of both to really get a trending mode to the upside, as you can see. Or break below for some smaller downsides. So back to this one. What I didn't have added was this trend line. That's basically the orange one, the light orange one, is where we would really get more confirmation. So let me take a look at the Camarilla in the meantime. So let me change the charts. In the meantime, Hans, fractals are basically indeed put on tops and bottoms of candles. And when are they put on the top or the bottom? Is basically when one particular high is higher than the 2 immediate candles to the left and 2 immediate candles to the right. So look at this candle. That particular candle high, you see that candle high where I have the green circle? That high is higher than 2 to the left and 2 to the right, because there's 2 candles to the left and 2 candles to the right. Now that's the minimum requirement. It doesn't mean though that there couldn't be more, because if you look at the example where I have the orange circle, you know, there's a ton of them, right? There are a ton of candles to the left and a ton of candles to the right that are lower. So the 2 to the left, 2 to the right is just a minimum. And when we have those 2, then a fractal is confirmed. The actual platform, when you look at price, actual price, you already see a fractal actually when the first candle to the right is closed. But we need to wait for 2 candles closed, because when the first candle is closed, we'll already see a fractal, but it's not a confirmed fractal. Only when the second candle closes will this fractal be confirmed and never ever, you know, disappear from the chart. Hope that makes sense, because that's an important thing. Okay, cool. So obviously the opposite will be true for fractals that are at the bottoms, right? Those will be the lowest of the 2 candles to the left and 2 candles to the right. And what the importance of that is that they just indicate local support and resistance. They show all support and resistance. All right, and also major tops and bottoms are always fractals. Per definition, they have to be, but also minor levels, in between levels, are support and resistance, and I like to use them just as an indication for you know, support and resistance close by. So I like them as a visual guide. Okay, so we're going to take a look at the Camarilla. Just give me 1 second. Just give me like about 30 seconds, 60 seconds. I'm going to grab some water. Okay, 1 second. All right, folks, I'm back. Sorry for that pause there. Let's take a look at the Camarilla. Now, Toronto is a lot better at using those levels than I am, because he is looking for movements that could be basically open and close within a shorter time frame than I am, right? More of an intraday scalp, inter-swing trade type of trading. So Camarilla pivot points are very useful for that. So let's take a look at where the levels are. We got an L4 at 137.08. We got an L5 at 136.80. So basically indicating that if we break, this is the euro dollar by the way, basically indicating if we break low enough, we got a breakout trade to the downside. And L3 is right where our current price is. As I said, we're at a potential bouncing spot. So the pivot point here, the Camarilla indicating indeed the potential for the price to do that. Let's see if we get the follow through though. If we don't and we break lower, we can see that the Camarilla is basically indicating that we need price to go lower before we get the follow through. Basically the L4 is lower. So what the Camarilla is saying is basically let price move lower, let it, however, break below the L4 before we have a breakout trade. It's basically the same as I was saying. Let price confirm a certain movement, right? And by price breaking through the L3 and then by breaking through L4, we are getting a certain impulse. We're getting a certain momentum. Remember what I said about the moving averages? Well, the same could be said here. When price is basically moving below L4, price is actually getting a certain momentum. It's picking up a certain speed, right? So when it breaks below L4, it has that speed because it already reached the L4. The opposite will be true for the H, right? The upside. Basically, when it's at H3, it doesn't have that speed as yet. When it has the H4, it would be the breakout scenario. Yeah, sure, Claudio. I didn't really say much, to be honest. I was just all that I really look at is where are the levels. So for those of you who don't know the Camarilla indicator, Alexander, basically send me an email and I'll send you that indicator. It's an indicator you can download as well, but if you search for it, most likely. But it's not a standard indicator on this on any chart. So now how I use it is not too, I think, not too complicated. And there are probably a lot more fancier ways to use it, but I just use it in a very basic way. And how I use it is more as a confirmation. I do my own analysis and I take a look at where are the L5, L4, L3, H3, H4, H5 levels. And I take a look if that matches and if there's a confluence with my analysis. So what I do is I look at where's the L3 and H3. Now I can see that the L3 and the H3 are at levels that correspond with what I consider support and resistance. So that makes sense. Why is that so? Because I said already that this is a support level right in here. So we could bounce off that. And the L3 is right there. So that makes sense. I already said that if the price breaks up, we're going to bump into resistance. We're going to bump in this trend line, and price is going to stop there probably. And that's the H3 short. So that makes sense too. So that's where I would say are the range levels. And the H3 and L3 are confirming that. Price, when it stays between those levels, are basically it's going to be a ranging environment. That's what I was already thinking myself. And if I see the Camarilla, indicating the same levels, then that's an extra confidence. It's an extra piece of confirmation. Now, I also said that I would look for breakout trade above the trend line. What I basically want to see is basically a combination of price and a combination of time, whereas Camarilla is only showing price. Now, what do I mean with the combination of price and time? What I want to see is a move up to the trend line. Then I want to see a bull flag and then a break of that bull flag. Personally, that's when I would be interested in trading that. So I would be interested in a break of the H3 short, but not immediately, not upon the first move up to H3, because then it will be probably resistance, as the H3 indicates, as my trend line also indicates, and they're giving a confirmation. But after a move up, after a smaller bull flag, then the break, I wouldn't mind trading the break of H3. If you look at the Camarilla is basically looking for the break of H4, which means that it's looking for a confirmation even higher. So it wants to see an up move up to H3. It wants to see then a break above H3, and then basically a break above H4. So when we break H4, a sustainable break above H4, we're really having a trending day. That's basically what it boils down to. It's always important to establish whether we have a ranging day. I mean, it's always important, especially if you're trading intraday, especially if you're trading scalping, right? Those two. If you're trading swing trades, then you could be a bit more off regarding the timing of things, because you can hold overnight and you can wait and see how the structure is the next day. And you can judge, later on if it's still worth staying in that trade. So basically, that's the advantage of that, right? Now, there are also advantages of intraday trades, of course. But now, in any case, it's good to know what whether the day will be ranging or trending. And if we stay between L3 and H3, there's a high that's pure and simple. It's a range day, right? If we hit the H4 or L4, it's a more of an expanded range day. It's bordering breakout / like a trending day. Obviously, if we make extended moves above L4 and H4, that's when we're really having a trending day. So my breakout scenario where I'm looking for a break above H3 is kind of like anticipating a smaller trending day. But waiting for the H4, then we're really getting into a big trending day. Those don't happen too often, though. And we would really get, if we zoom out to the hourly, or 4 hour maybe, when we break above H4, we're basically no, sorry. No, that's the pound dollar. I got confused with the pound dollar. Anyhow, scratch that. I'll tell you in the pound dollar that idea. In any case, when we break above H4, obviously we're going back towards this top, back to the 138 area, and we're going to retest this resistance line here, the higher orange one. We're going to retest this top. We're probably going to close the gap. Someone mentioned the gap earlier on. Let me see what the question was regarding the gap. Oh, Bjorn, sorry about that. I forgot to answer your question earlier. It was already a long time ago. Apologies for that. Whether the gap at the top is very rare, yeah, you don't see many gaps. Certainly don't see many gaps in the Forex. I mean, stock market has a lot more gaps. You'll see occasionally a gap after the weekend, though. Let's see. So then we'll probably fill the gap, go and retest this top, right? Now, how about the downside scenario? Basically, L4 would be a breakout scenario to the downside. How does that fit in the larger picture? Basically, it's saying, as I'm saying as well, if I put a fib on this upside, I was saying, well, we don't see this purple too much. Let me make that white. 1 second. I was saying, I want to break below 61.8 down to the 78.6. And it's funny how a bounce below how a break below the 61.8 matches with the L4 and L5. It's actually a very nice confluence right there, isn't it? That too matches. So here too we got a confirmation. So break below L4, we can get the downside break to L5. Now, let's see, we got some comments. Kaylin is saying, how about a long at L4? Yeah, the question is if price can get there. If it does, it might be a bouncing, it will probably be a bouncing spot. The question is whether when we bounce at the L4, then how far can we go? There's a likelihood, or there's a probability that the bounce could be just short-lived, and we can bounce into the former support becoming resistance. Something like this could happen. Down, bounce, up to resistance, and then maybe a downside. Could happen. Who knows? But it could make sense to shop around at the L4 indeed for upside as well, instead of waiting for the break below L4. That's definitely true. Just be careful about the trade management side. That's all, I guess. Well, depending on your risk appetite there. So let's see if we get the upside. I do think that upside seems, as I said, seems more likely to me than downside. So let's see if that materializes or not. Let's take a look at the pound dollar. The only thing is that although upside seems more likely, the question is whether we'll get a ranging day or more of a trending day. So pound dollar. Give me just a second, folks. I hope you don't mind. I'm a bit hungry. I maybe didn't eat enough before the webinar. So let me just grab, I hope you don't mind me chewing here as I speak. I'm just going to grab a piece of some food here. Apologies for that. So, pound dollar. Thank you, Alexander. And Anna's having coffee, so that's great. I think that's that I could use one as well, maybe later on. Although during the day I try to drink more tea, to be honest, but I always like to start the day with a coffee, just to wake up a bit. Normally I get up at like 4:45, I say. Sometimes 5:15 if I want to give myself a bit more extra minutes. Anyhow, we got a let's see, H3 short at 166.84. Let's see. Kind of matches as well. I do have to admit that if I look at the Kimberley indicator, it in many cases it does seem to match with the fibs and trend lines I use. Now, not always, but I would say in majority of the cases, certainly, probably even in a decent amount of cases, I would say. I don't know, maybe even 80. It's difficult to say exactly, but here too we can see exactly that price stopped at the H3. So a break of the H3, right, would mean that we are having a, let's say, a first trending day, or let's say it this way, first breakout. That's what I mean. Okay, like a first breakout scenario. But as I also said, is that because the moving average is so flat, is that first breakout could just go for a bit, and then it could already retrace. How could it retrace? That's the question. Will it be a bigger down move? Then basically, the H4 is acting as a resistance, right? Which that's what I expected. Basically, the H4 as a resistance. Will it move down back to the pivot point, for instance, and then bounce? That's something that could happen. That's one scenario, as I said. Or if it breaks H3 and then starts to make a bull flag like this. Let me draw that again. Then a break of that bull flag, that's the trending breakout trade, basically, that that I like, right? And then we have the break, basically, not only of the bull flag, of the smaller bull flag on the 15-minute chart or 5-minute chart, but we also have a break of H4, and then the H5 is the target. So that's what I basically, this scenario is basically what I was trying to, picture to you using my tools. And if you look at the indicator, Kimberly, it's kind of, I think it matches nicely. So now you can see what what type of day I would be looking for to trade it which way. Now, how about the other side? Let's see. I was talking about the fact that I have my stop loss at 166.37 now. You can see why. Because not only is that the bottom, but it's also H3 long. So if that level breaks, there could be some downside down to L4. But really the breakout scenario is below L4. Let me go to the 30-minute chart. You can see when we break below L4, we get that breakout trade to the L5. So that is the scenario here. Basically, I have my stop loss here at the moment, just below L3, and if that breaks, we could see not only a break of L3, but also this support line right in here. Oh, that's the first thing. We break the support line, and if we don't break, if we break this support, sorry, I'm a bit confusing now. First of all, we need to break the trend line. If that doesn't hold, if the trend line doesn't hold, then this support cracks, then of course I'm out of the trade and we have potential fall to L4. If we then make a bear flag, then personally I think it's a good short to L5. I don't think that a bounce off L3 though would be a great trade personally, but it's possible. Or a bounce up to the upside at L4. I mean, if it breaks the trend line, if it breaks L3, then we're having a decent chance of finding a trending day to the downside. So we wouldn't want to start longing in a trending day to the downside. The only occasion when I would start to look for longs is after being taken out of the trade or seeing that the price is really coming close to taking me out, is if it's the end of London session, and well, it's difficult to imagine, but maybe, for instance, a downside like this and downside like this, and we're making a lot of consolidation like that, and we're not breaking L4, and it's the end of London, then maybe a long could make sense because we could expect a bounce probably and some consolidation, and then tomorrow we could see some upside. For instance, well, it's it's difficult to go through all the scenarios that today could happen, but that's just one of those ideas that you could look for time factor things to in combination with this Camarilla. So yeah, so those would be the key levels, I guess. It's just a good way to keep an eye on this indicator to see what kind of day we're having or could have, whether it's trending or ranging. If you're a swing trader or a breakout trader, you're looking for a ranging day, either as a follow-through for your swing trade or as a quick position intraday trade for your breakout trade. If you're a range trader or a reversal trader, you want to see some extremes as well, but you're anticipating a move back to the moving averages, back to the mean, in fact, right? So, well, let me know. Let's see. We got a question from Hans. If there are any bull flags on the chart, let's take a look at other currencies then. If you have any questions, let me know. Otherwise, I'll move on to some other pairs. The trading camp, no, I don't know when that starts. No, sorry about that. Maybe the best would be to, I don't know if you have any contact person, or otherwise, I guess the general email address will be needed. I can ask. Wait, let me ask. Maybe someone knows, okay? One second. Just give me a second as I write my contact person at Admiral Markets. Alrighty. Let's see. Got a question. No questions about the Camarilla, so I guess that's all clear. So I'll move on. Okay. If you still have it, no problem to still ask it later though. Alexander is asking, seeing a bullish is a bullish pennant. Oh, absolutely. You can use that pattern. Chart patterns are great. I love them. I think I just failed to mention that here in our session, but it's definitely a triangle, a wedge, contracting wedge, pennant. I think roughly all the same names, or same patterns, same different names though, but definitely present here in this pound dollar, and in that regard, looking for a break to either side, right? So although we still have those horizontal levels to be aware of when we break. But that's definitely an extra confidence, an extra confirmation of the consolidation that's happening right here on the pound. So let's take a look at the others. So what are the lines on the sand of the odd USD? Well, wait, I think some price action is missing here. 1 second, folks. Yeah, there it is. Okay. So what are we looking for here on the odd USD? We're looking for a break of these trend lines for an idea what the bigger, what the longer or intermediate, maybe longer is a bit exaggerated, intermediate direction could be. And we did break to the upside. That was probably during a news event, right? The Aussie news event, always important for, or yen news event, always the main driver of the Asian market. So we can see AUD USD making a spike up. But, the funny thing is that although it did spike up, what do we get? A move down. And I talked about this. This is actually a prime example of how price is trying to escape its moving averages, but then gets rejected as it does. So if you keep this concept in mind, it will help with understanding, the breakout retracement relationship. As I said, the price was in the moving average. So if it does break out to one side, the likelihood of a follow through is not so high. Yes, you will get some movement. So if you catch these whatever pips it is, 30 or 40, that's great. But eventually, every pullback is likely because the moving averages are flat and intertwined. There's no trend here. Now, although I use these lines as a trigger, right, because those are the lines in the sand that I say, okay, I want these to break before I have an idea which side the market wants to move into, doesn't mean that I would want to trade these lines in the sand, these triggers, because of the fact the moving averages are totally intertwined and flat. And therefore, although the lines in the sand are good like for informational purposes, unless you want to, there's nothing wrong with trying to grab here 20, 30 pips or pips. You probably have to be a news event trader to do that, of course, because it was a news event triggered, move. But nothing wrong with that, right? But although these lines are the lines in the sand and the trigger, for me to actually trade it would have to be a different point, either when we get follow through or upon the pullback. As you can see, if a trader would have waited for the pullback and kind of like a bounce because the down move was big. Let's go to the 15-minute chart where he has a good idea. It's indeed more useful if you wait for the pullback, which was pretty deep. So it's good to wait for some confirmation. The confirmation we get is when, for instance, we use time factor rule, and you can see 3 candles, 2 candles not breaking. This bottom is already a good indication, especially sorry, especially if we get 1, 2, 3, 4, 5 of them. Then it's not the ideal level maybe, but it's the safest though. Of course, if you use a 5-minute chart, you can even get an earlier level, because if you wait for 1, 2, 3, 4, 5 candles to break, you can fib this move up here like this. Oh, now we have a white fib. 1 second. Let me make that visible again. Right? We have time factor. Half an hour not breaking this bottom means we're going to bounce. And if you fib it, then waiting for the 61.8 or 50 fib, that's probably the hook back. And boom, you got a trade right there. So basically, what was the idea? Let's zoom back again. The idea was trading the break of this triangle. But waiting, not immediately entering on the trigger, right? Not entering here. You could, but this idea is not based on the immediate trigger. It is based on the pullback, waiting for the pullback to finish, waiting for a confirmation of the pullback to finish by using time factor as a rule, and waiting for 6 candles, then waiting for basically the hook back and fibbing the first move up, taking the hook back off of the bounce, off of the break of the triangle for up to the targets. I know that sounds maybe exaggerated, but that's how you can minimize the risk here to 89.44 to about basically 13 pips. And well, if you would have, in this case, you can still hold on, or you could have exited at these targets. And you're aiming for either a 22 pipper or a 30 pipper. Anyhow, that could have been an idea. Let's focus more now, though. Just want to give you some inspiration here, or strategy ideas, or a mix of concepts one could use, let me say it this way. Waiting for more confirmation is always never wrong. More confirmation, when we would have that, that would be a break above these 5-minute tops or this 15-minute world, right? Now let's talk about now, and just give me a second where I take a look at Way's question. Oh, let me put an 8 EMA. Way's recommending an 8 EMA. It's always good to use. I like fib numbers for moving averages. Very useful. I'm a big fan of that. So let's put the 8 on as well. Let me make it purple otherwise. Blue-violet, officially it's called. Make it thick and make it a close. And you can see how price is, nicely. This is a great way as well for indicating when we get a trending mode, right? Because if the price is below the 8, then things are really, and the 8 is below the 34s, then it's really moving fast, isn't it? I think I missed a question, by the way. Let's see. Earlier, let me see. No, I didn't. Okay. Munirai is asking, what is the best time frame trendline trading? Well, I think that using trend lines for 5-minute charts could be a bit slow. So I think it's better for swing trading personally, but and intra-week trading. But I'm not saying that the intraday is bad necessarily, but it could be a bit slow sometimes to trade it. And if the intraday, you are limited in the potential a day has, and you want to be careful that you don't start using trend lines and start getting messed up in a range within the intraday. So that's the only cause I have, worry I have with trend lines on an intraday basis, is that you need more confirmation before the trend line gets broken in most cases, and then there's not much daily range left basically. So that's why maybe I would say intra-week can swing. But let's see, the EMA purple is an 8 EMA close. One other EMA, by the way, so this, you can see how useful that is. And let's take a look at the 15 here. I would say, looking at this Aussie 15-minute chart, is looking bullishly structured, right? We already had a break. This is looking like a pullback. Looks like a pullback to go. It's still a bit early to say so, but there's that chance that we're going to get a breakout to the upside here. Moving averages, everything is aligned to the upside. We could get a follow through. Basically, we're getting a break, pullback, and this is part of the continuation, or could be. Well, let's look at the bigger picture to see what that could mean, okay? Well, basically, this downside was very choppy, and if we are basically, it's not able to get some follow through to the downside. Every time we make downside, we're finding supply, we're finding demand, sorry, we're finding buyers. So we also have maybe this inverse head and shoulders like this. Looks like we're breaking through a neckline, because even if you put a trend like this, we broke out of that. The next resistance line could be something like this maybe. That's something to be aware of. But other than that, there is that. This is looking corrective, so we could see the breakout maybe to the upside. Oh, the trading camp starts next is the 10th of March. I got just right now. So that's 5 days. I guess that's a Monday. Let me check. Yeah, that's next week Monday. Yeah, so on the lower time frames, we might have a breakout trade up to this next point. Why there? Because that would be, obviously we have a top here. Obviously also we have a bigger resistance line kicking in. So there could be some smaller trade to the upside, but that potential is limited, as you can see, because of the next trend line. Let me make that a bit different color here. Let me make that purple, okay? Up to the purple trend line, we have a small breakout trade, but we really need to break above purple for a more, decent-sized intraday trade, intra-week. Generally, though, this is quite choppy, this odd USD. Other moving average that can be pretty good, by the way, to use is, for instance, a 3-period moving average and shift it forward by 1 or 2 or 3. And it's useful because it's actually posted forward in time, and what it does is basically you can use it as an idea if how impulsive a move is. If price is below it, for instance, like this, we can see the impulse here. Now, eventually, though, if it stays long enough below it, then there's a likelihood of a retrace coming soon. If it's, I would say about 8 candles. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. Okay, this one has 9. That would probably be, roughly speaking, the max what you should expect in a trending mode. About 8 of them. Sometimes I guess it could be 10 or 9, but it's just a rough indication. 1, 2, 3, 1, 2, 3, 4, 5, 6, 7. And then we should touch the this faster one again. Because if it's 8 candles above it, then oh boy, it has spent already a tremendous time of energy and power moving away from the moving averages. So then the likelihood of a retracement is high. All right, so is there any intraday trade that makes sense? Well, intra-week trade, swing trade, maybe a break of this trend line here could make sense on the dollar CAD, or maybe even a break of this trend line here like this. I would say this one, or maybe even a more conservative trend line like this. It's about the same maybe. That could make sense. Dollar yen is not too interesting for me. I'm still waiting for either a break above the tops or below the bottoms. So let's see. Pound yen is interesting. A break above this purple line, this trend line, could mean a breakout trade to the upside. Oh wait, let's see. Kaylin is saying something. Maybe it's the dollar CAD that Kaylin is talking about. No, I'm not sure now. Kaylin, which currency? I went a bit fast through the charts. Oh, AUD, okay. $89.20, yeah, that's possible. It looks like already like it has a head and shoulders here, but maybe the only thing is that the time factor here doesn't add up. The left shoulder is a bit longer than the right shoulder, so it could make that retrace down and then bounce again. Certainly can. It's definitely it is in a vulnerable position. I would say that there is a small chance, there's a decent, I don't know how to formulate it. There is a chance, let me just put it neutrally, that we move up to this one. Is it a trade that I would like to really take? No, not really that particularly, because there's just not much space. And it's in a vulnerable position. Why is it in a vulnerable position? Because of the fact that we have, moving averages are crossing each other. And that always brings a lot of choppiness with it. So I don't like the setup. There is a potential to follow through, but we don't want to trade it. What could happen is if we dip down, we could find again a bounce to the upside. That could be a bit more interesting, in fact. Or if we break below, that could also be interesting. One of those two scenarios, the bounce or the break of that orange line. Let's see, pound odd. Still looking for a break above this magenta, basically, this magenta trend line that will also be breaking above the moving averages, which means that watch out for the pullback potential after we break. Euro odd, same story. Have to wait for a follow through to the upside here or downside. We're in a triangle, right? Let me see, Euro Yen also approaching a very important key resistance. If we break above that, there could be a swing trade to the upside. So nothing really catches my eye that is very, very super interesting at the moment. I mean, the pound yen, Euro Yen are setting themselves up. The Euro odd, pound odd too, it's just taking a lot of time. Both are, or at least the Euro odd and pound odd are in triangles, so breaks to both sides could make sense. And the dollar CAD, I guess, Aussie I would be a bit more cautious. So, well, folks, I guess that wraps it up for today. Thanks for joining today again. Later on, we have Trendline talking about, I think, price action, if I remember correctly. Tomorrow we'll be back with this live trading room, of course. And tomorrow evening we'll be talking about discretionary trading. Trendline at 6 p.m. Central European Time, or 5 p.m. GMT. So thanks everyone for your thanks and comments. Greatly appreciate it, and have a great day. Cheers.